Hey guys, I hope you're doing well. If you already are subscribed, thank you for watching. If you aren't subscribed, click the subscribe button now so that I can bring you more quick financial videos in the future. So many people, including my wife, have asked, how does a company go public or make it to the stock market? For beginners, a company has to start out as a company. And this would be either one person starting it or a group of people starting a company. Over time, that company will grow. And through that growth phase, sometimes other investors will be brought on to bring in more money for growth and expansion, and you'll give them some of the company ownership so that you can grow that company. And sometimes maybe you just own it, or the same group that started it just own it, and you don't have to bring on other investors. Other times there are companies called venture capitalist firms, and these are just groups of people, a company that goes out and invests large sums of money into other companies in exchange for ownership of that company normally. So a company will go through this growth phase, and either later in their business lifespan, they'll decide that they want to go public, or from the very beginning, they decide that their goal is to become a public company. A company would prepare in several ways to go public, including auditing their tax records and their accounting information and making sure it's all accurate, making sure they're a profitable company and as profitable as possible so that they're an attractive business when they want other people to buy into that company. They want to be looking good and looking their best. They want to make sure that they're one of the top companies in that sector where they're competing, that they're a competitive company, as well that the sector where they are, that there's room to grow and room to expand and become a larger company. Because if not, there's no reason to get other investors and for people to invest in them because the company is already basically as large as it can get. So all in all, you just want to be an appealing company that looks good and that is good and has a good future outlook as far as projections can go. Eventually, this will result in the day when the company finally goes public. This is called their IPO, or initial public offering. This is just simply the first day that the company is offered as a publicly traded company where you or I can go buy a little sliver of that pie or a share of the company. There are two main reasons why a company would go public. One of those is so that venture capitalists, remember those big companies that invest in companies, it's so that they can get out actually. So if they've invested a bunch of money and they want to sell that or get some of that money back, sometimes they'll urge that company to go public, and therefore they can sell some of their shares of that company or their pieces of pie so that they can have some of that money back. Or maybe they want to get out completely and they can't find somebody who wants to spend $1 billion to buy their portion of the company. But if you go public, you can find 1 million people that want to spend $1,000 to buy a piece of that company. So it's easier to sell the company in smaller portions like that if they're public. Another reason companies go public is just to raise money so that they can grow and expand. Now, this is a catch-22 because the company should have a good amount of cash reserves when they are going public. This makes them look more attractive. It prepares them to go public because they have money to spend, because it costs quite a bit to have people in place and legal stuff and whatnot to go public. But they obviously need more money to expand and to grow. Sometimes large franchises will do this so that they can have money to expand and go to different states, go to different cities, do more locations and whatnot. In the next video, I'll be talking about what is a stock in the most simple terms possible. I hope that helped you understand why a company goes public. If you enjoyed this, be sure to smash the subscribe button so that I can bring you more quick financial videos in the future. Thank you so much for watching, and I hope you have a wonderful rest of your day.